Our next guest says the market, the volatility is creating opportunities for investors. Jay Bowen is the CIO of Bowen Haynes, which is the sole manager of the Tampa Firefighters and Police Officers Pension Fund. The firm has $4.5 billion in assets under management. Have you sold anything at this point, Jay, or are you using any of the recent weakness? I don't know, 10% in the S&P. Have you bought anything?
Yeah, with our approach, which is very long-term, it's funny, if you look at the algorithmic trading patterns when we have a correction like this, I think what you'll see is oftentimes what's done well, and anything that's had even a hint of momentum really gets hit disproportionately hard. And so that can create opportunities, particularly in companies with really strong, solid long-term fundamentals. Sometimes they get thrown in with these pure momentum situations. I think the problem right now, the market is really struggling trying to price the future with all of these uncertainties swirling. They're all up front and center, and you know, it's a long list. The good stuff is still on the distant horizon, the growth stuff, the deregulation. But I do think we've got a good shot at the script flipping when we move into the second half of the year. So I think it does create opportunities.
Those are some of the things that we thought about a couple of months ago that were going to be, no doubt, we're going to be positive. We didn't have to worry about the corporate tax rate going up. We were going to, have all this deregulation. Companies are going to be able to merge again. There's going to be animal spirits, and then we ran into the possibility of a trade war on different fronts. But you think
right.
that it eventually reconciles itself in a positive way?
Yeah. Not only do I think these uncertainties are going to dissipate, I think they're going to actually become positives as we move into the second half of the year. I mean, we'll get the reciprocal scheme on April 2nd and see what that's about. But I do think moving forward, it could lead to a lower tariff and non-tariff barriers on a global scale. The monetary and inflation story, I also think, is going to get better in terms of the Fed. The inflation story is going to come their way. They're going to become accommodative again. And I think the yield curve is going to disinvert, similar to post-election, based on higher real rates for good reasons, for good growth-oriented reasons, higher real returns on capital, that kind of thing. So that's a good story. And then we are going to have a tax bill. It's coming, and the 2017 is going to be extended, the act, and there'll be a growth component. And geopolitical / foreign policy, things could really settle down in the second half. So, like I say, I think the script could flip moving forward, and that 2026 could be a strong business year, which will start being discounted later this year.
I want to hear about a couple of your stocks, but I just have to ask you whether, we're watching this Doge situation play out, and it's really sort of driven a wedge, if it was possible to drive even more of a wedge into the way people think about what Washington does. Will there be enough identified to make an actual difference in what the government spends? And is it worth the pushback that the administration is getting just across the board? I mean, Tesla dealerships on fire. It's insane. Jay, is it worth it? Would you even attempt to do it? It's almost, I'm ready to just say, the government is so bloated and out of control. There's no, it doesn't have to earn a profit. We just tax more when it overspends or take on more debt. Just let it go. It's not worth it. It's not worth too many sacred cows to mess with.
Unfortunately, it's got to be done. The budget's 45% higher now than it was pre-COVID. And this is not your father's 1982 Grace Commission, as you know. I think this one is more substantive. And I do think it's going to, you can argue with the mythology and how it's being implemented, but I do think it's long overdue in terms of these audits. And I do think, it might not be $2 trillion, but I certainly think $1 trillion is achievable. And it's something that I actually, moving forward, almost as important as that is what's going to happen on the regulatory side / deregulation side, particularly flowing from those 2 Supreme Court decisions. That's just vital. But this stuff takes time, and it's on the distant horizon, and the market is uncomfortable pricing that right now.
I know you some of the stocks you mentioned: Eaton, GE, Vernova, Corning, Boston Scientific, AX, American Express, Teledyne. Those are all you would hold or add to those positions. We got to go, but those
Correct.
are some.
Both.
Yep.
And we consider these really technology companies, some of them disguised as industrial companies. All of them, I think, are double-digit compounders long term that really have very strong financially, strong management teams, and a lot of proprietary products that play into this fourth industrial revolution.